There we go.
Right. So, hey guys, my name is Harsh, and I've been part of the Zoom since last year when we're still part of TCX, but Trent had started up Zoom last year, and then we've been here since the beginning. We had like Josh, me, Munchet, Julian, who's Jay the Trader, Mario, of course, like in a Trent because he's been hosting Zoom all this time, right? And we've been trading options. I dabble in like a commons too, which is just shares, but I do a lot with options also. So for for the folks who are over here who've been trading over the last like in a couple of months, I've been making call outs, uh, talking about which tickers to play, calls, puts. My style is more geared towards smaller traders because not everybody has a large account, right? And everybody has listen, some people have less than $100, or some people have less than $500 to be able to trade, and that's what I try to cater towards. That's primarily my audience. If you've been following my callouts, I don't really make large plays like Microsoft or Facebook, although those are pretty liquid and great stocks to trade. It's just that my style is a little different. And along with trading cheaper options and cheaper tickers, what I also do is I also look at basically selling premium, which is doing cash secured puts and doing like covered calls. And a lot of folks who've been over here are probably bored by now because I've repeated it so many times. But again, for all the folks who have joined new, don't worry about it. If you've missed it, I'll go over that again too in one of the sessions. So the basic thing with the options, right? I mean, like a lot of y'all already understand, okay, how to buy and sell options, what you'll need to look for, the Greeks, which is, the delta, the theta, the time decay, the vega, and the gamma. So, since Zach brought it up and he said, he wants to know what's the important values to consider while trading. First and foremost, let me just share my screen and so y'all can see what I'm actually looking at. All right, can y'all see my screen? Type it out if y'all can. Go ahead and type it out. I just want to make sure everybody can see. All right, perfect. Yeah. So as far as options, right now, it really boils down to styles. Some people, I initially started as a swing trader, and then I was more comfortable with swings. But as the market changed, as things got volatile, it made sense to also start looking at day trading or even scalping. So first and foremost is you've got to identify what kind of trader you are. Basically, people are busy, right? A lot of people have jobs, so you're not everybody can basically day trade or stay on Zoom the entire day or monitor a position once they get into it. So people like to swing, or some people are able to day trade given the fact that okay, most of the folks are working from home now. So the first thing is you look at time frames, right? For a long-term investor or a swing trader, what I and I'm talking about long-term in the sense people who will hold for months and months together, probably people who also hold for years at a time, right? Leaps, for example. So the time frames that you would look at for long-term is the yearly, the quarterly, the monthly, and the weekly. All right. Again, for long-term investing, it's the yearly, it's the quarterly, it's the monthly, and it's the weekly. Swing trading, something that you're looking at least about a month to let's say a couple of months out, 3 to 6 months out, what you would look at is the monthly, the weekly, the daily, and the hourly. And then finally, for day traders, the time frames that you're looking at is the daily, the hourly, the 30 minutes, the 15 minutes, and then the 5 minutes. These are the best time frames to look at, right? Now, what I like to do is usually when I'm planning out my plays, I have a set list of stocks that I go over. Right, I have like in the watch lists that I have created, and I'll show you what I mean by those watch lists. So this is like this is my watch list for the month of April. I have all these stickers: American Airlines, Apple, AMD, apps, AXP. You want to create a short list of tickers that you would like to play. There are hundreds and hundreds of stocks. You cannot like trade everything. You cannot jump from one to the other because it's just going to be too difficult. One's making a move up, the other is making a move down, and you're just going to be switching back and forth between different tickers without actually like being able to enter plays. So similarly, what I've done is I have multiple tickers. Like look at this one. This is a cybersecurity watch list. It has like the list of stocks that are in the cybersecurity sector. Then I have one which is the EV sector, like so all EV stocks basically go over here. Then I have one which goes over like you have the indexes, you have the financials, you have the FANG stocks, you have the oil stocks. So I've basically broken it down into several different watch lists. And when I'm planning out my trades, what I do is I look at these different tickers. Lately, what I've been loving is the inexpensive stocks. So these are the inexpensive stocks that I like to go and look at and see what they're actually doing, like American Airlines, Apple, AMC, AMD, Bank of America, CCL, GoPro, Halliburton, IAU, which is a gold stock, then IWM. You have X, you have Vail, you have AT&T. All of these people who are playing options, who are basically not playing with large accounts, these are good tickers to go and look at, because the contracts that you would be playing are inexpensive, and these are not extremely liquid. I won't say they're extremely liquid where you have like big moves up and down. They are steady movers. So what happens is, if they are going up or if they are going down, you basically you're able to follow it. It's not like, okay, you've got to jump back and forth and see where things are heading. Okay, there's a sudden spike here or a sudden spike there. What should I do at this point, right? So those are the kind of ones that you want to actually play, tickers that move steadily. So this is my list. If anybody wants to take a screenshot of this, go ahead. And I keep adding to this list, right? This is not the be all and end all. This is just part of some of the tickers that I play usually when I'm trading. That's number one. Then what I like to do is, when I open up, like, let's say if I take Apple, for example, you see I have the yearly, the quarterly, the monthly, the weekly, the daily, the hourly. I like to see what each ticker is doing on every time frame. Is it up? Is it down? Is it bullish? Is it bearish? Because when you look at the larger time frames, that's how you get to know what buyers or sellers are actually doing. If there is buying on the larger time frames, you know that the bulls are in control. So for you to play a put for a month out wouldn't make sense, because you're just going to be burning premium at that point. You want to trade along the side of where big money is. That's the whole that's the whole goal. And that's why I have this up. I have look at AMD on the yearly is basically down, but on the smaller time frames, it's still green. So basically at this point, AMD is there is still uncertainty of whether there's going to be buying pressure or there's going to be selling pressure. So my whole goal is, if I'm going to play something for the week, or if I'm going to play something for the month or for the year, I'm looking at the larger time frames and confirming who is actually in control, and then I'm going to be entering some plays. I'm not blindly entering thinking okay, you know what, I see this suddenly running up, I can buy a call a month out. How many times have folks entered a play and then waited, okay, it's gone up 20, 30, 40, 50%, but then not realize okay, what is my profit target? Where am I actually supposed to get out? What is going to happen at a certain point? I mean, yeah, we see the break of a bull flag or the break of a bear flag, and then we enter a play not knowing where we are supposed to basically get out. So my strategy, basically, I have a fixed entry and I have a fixed exit. And when I play it, I'm basically looking for those triggers and those targets to be hit, based on whether it's a call play or a put play. And then I'm making that play on on the smaller time frames, and I'll show you what I'm actually doing. But as I said, in order to confirm a play, I'm first confirming who is actually in control on the larger time frames. Is it buyers, or is it is it sellers? Let's bring up Tesla over here. Tesla on every time frame, once it loads, then we'll take a look at, okay, Tesla on every time frame is basically green. On the year it's green, on the quarter it's green, everywhere. I'm sorry, Tesla is actually red on the quarter. There is some selling pressure, and on the week and on the daily also there is some selling going on right now. So see, Tesla again is in conflict. You don't know where Tesla is going to head. Like, people, like Thursday, Friday, we saw, okay, Tesla broke its delivery numbers. But then what happened today? Technically, it was supposed to run up. Yeah, it happened a little bit, and then see, it pulled back. Why? Because on the absolute larger time frame, which is the yearly, sellers are still basically in control. It hasn't flipped, it hasn't flipped to buying yet. And that's why something like Tesla, you would play it for a very short time frame, maybe for a few hours, or maybe for the day. And as you can secure gains, you would get out, just because you don't know where this is going to be heading, because it's it's in what I say, in conflict right now. And the next thing is, when you're looking to play an options, the main thing that you want to see is your delta and your your theta, because that is what is going to dictate how much money you're going to be making on your contracts. And TOS has the option where you can customize it, right? When you go into, if people are using the TOS desktop app, you see this trade tab over here. When you click on that, this is where you can bring up your option chain. And over here you can change the layout. I've changed the layout from the default, where I have delta, I have theta, I have the IV, because IV is extremely important too. And then the volume and the open interest, just five, 5 columns is basically what I have. And so when I pull up, when I pull up the option chain, this is what I'm seeing. I'm seeing, okay, this is the delta. 29 is the delta for this contract. Let's say I play the 31 call for AT&T. 29 cents is the delta. That means for every dollar move, I'm going to be making about 28 bucks on the contract. And theta is only about 1 cent right now, which means for every day I hold this contract, I'm only going to be losing $1. IV is also pretty low. I like IV anything less than 70-75%. I do not like IV higher than that, because what happens is, if the IV is extremely high, let's say at about 100%, okay, that's when your premiums are juiced. And when that IV drops, your premiums are going to go down regardless of what the stock does. Let's say the stock still keeps going up a little bit, but if your IV drops, you're going to be seeing a drop in the premium. Somebody this morning asked about DNN, and why DNN is not moving despite the actual ticker going up, the underlying ticker going up in price. That's exactly why. It's because IV is not going up on DNN. As IV goes up, that's when your premiums are going to be going up. So if DNN is moving but your IV is not moving, you're not really going to be seeing a lot of movement in the premiums for your contracts. So that's what IV is. Next thing is you also want to gauge, right? Look at this. You have an open interest of about 85,000 and a volume of about 21,000, which is pretty significant. So that means people are expecting a movement for AT&T, and probably the 31 strike might go into the money. It's at $30.66 right now, given the open interest and volume. like people are, whoever, whoever is buying this big money, who's who's playing this, are basically expecting that, okay, AT&T is probably going to go in the money by April 16th itself. That's why there's such a large volume and there's such a large open interest. I wouldn't necessarily just play on volume or open interest. This is just sort of to gauge where what people are actually thinking AT&T might do. So it's just to sort of gauge movement, nothing else. I would not trade primarily based on this. I would look at the delta, I would look at the theta, and I would look at the IV to pick a nice decent contract, so that as AT&T makes an underlying move, the premiums are going to keep going up, and you can basically make some money on it, right? So that's how I look at my contracts. Now, as far as my bread and butter of how do I basically take a play, or what do I look for when I'm taking a play, right? So the major thing that I like to play are stocks that are consolidated. All right. And I'm not looking at something that's going to squeeze over 10, 15, 20, 30 days. No, I'm looking at stocks that are consolidating, even if it is just on the previous day. Okay. Now let me see which you're looking at. Okay. So I'm assuming that y'all can see my screen where I've brought up where I have brought up Visa. Now what I've done is I've actually numbered my candlesticks. So when you look at this particular candle bar, which was from December 16th, okay, I've labeled it a 1. All right, I'm not going to go over anything else right now because there are a lot of new traders over here and I don't want to confuse y'all, right? So for anybody, even if you're a seasoned trader, you can definitely start with this. So this number 1 indicates that this is a consolidated candlestick, which basically means it did not break the previous day's high, neither did it break the previous day's low. I'm looking at the daily time frame at this point. So let's say this was December 16th. I basically ran my scan and I saw, okay, Visa has has consolidated on December 16th. Let's see tomorrow what it might actually do. Visa in December was a pretty good, had a pretty good month. So I know Visa on the monthly time frame was green. Even on the weekly also it was green. So that confirmed my bias, my bullish bias. I was like, okay, on the month it's green, on the week it's green. So since it's red over here, eventually this is going to flip back and buyers are going to basically step in and take control. So what I did was I immediately marked I set my alert over here at this particular level, like, okay, if Visa breaks this 209 point some 209.04, I'm going to enter calls. My first target was going to be 209.5, but then you know what, 209.5 is way too close. Visa has a good ATR of about $4. So this was going to be my actual target where I would take profit, which is 211.25. So when the day opens, I'm waiting, okay, Visa opens, it does whatever in the morning, right? It doesn't matter. I'm waiting for it to actually break my trigger, which is the 209 or 209 point, 11. As soon as it does that, I'm looking okay, there is decent volume, there is buying pressure, fine. I'm entering a call and I'm waiting for it to hit this target. And look at what it actually does. Base Visa, once it breaks its consolidated bar, it takes out everything and hits my exact my exact target, which was the 211.31. A $4 or $5 move for Visa on a single day is at least about 200 to $250 on your contracts. And I don't even need to play something close to the money, right? I'm the Visa is at 209 and I want my target is 211. I can basically a week or two out, I can take the 211 contracts and let Visa play out. What happens in that case is, because I'm going a little out of the money, the contracts are cheaper, and the theta also is not going to be way too much. So I'm gauging for it, right? I'm looking at what the delta is, I'm looking at what the theta is, and because it's a little out of the money, they become a lot more affordable. And that's what you guys would have seen when I'm making these like these calls. I'm going a little out of the money, because see, something that's out of the money, when it becomes in the money, that's when like all your premiums and everything are going to be like juiced to the max. It hits my target. As soon as it hits my target, I'm basically like getting out. That's my cue. I don't care what Visa does at that point. It could run to 220 for all I care. My target was it needs to take up 211. It did that. I've secured my profits. If that means I'm taking 20% on my contracts, that's fine. If that means I've made 100% on my contracts, that's perfectly like that's perfectly fine too. I'm looking at what my target should be. See, so this way, now this addresses the whole concept, like, okay, I've entered a call or I've entered a put. Where do I get out? Okay, it broke a bull flag, it broke a bear flag. Where is my profit target? Am I looking at 50%? Am I looking at 100%? Where should I actually get out, right? This basically clearly defines where I'm getting in and where I'm actually like getting out. That's how I'm playing like my whole like contracts. This gives me a clearly defined place to get out. So I know, like, okay, at this point it doesn't matter like what happens. This is my target. Because how many times have people held on to something only for it to reverse back? So let's say this very same thing on Visa. Look at December 17th. Fine, I enter a call. It goes up, boom, it hit my target. Oh man, awesome. I'm like 200% up, I'm 300% up. I'm going to hold this, let this become 500%. Only for this to snap, it hits 211.77, only for it to start going back down. And now you're slowly starting to lose like value on your contracts, and you're slowly starting to like lose how much you've actually like made. That's what you want to like that's what you want to avoid. That's what you want to prevent from happening. Secure your gains. Nobody goes broke securing gains, even if it means you're only making $5 on a contract, because that's $5 which you never had like previously. If I always give this analogy, right? Somebody walks up to your door and gives you $1,000, like no questions asked. Are you going to take the $1,000, say thank you, and walk away, or are you going to give that $1,000 back and tell that person, nope, I don't want 1,000, I want 5,000, give me 5,000 right now? What are you going to do? Think of it when like when the next time when you're playing like calls up puts. Think of like think of what I just said. Like somebody is giving you money, you're getting money that you never had previously. Are you going to keep it, or are you going to like are you going to give it back? That's the whole like idea. So this was like this was Visa. Let's bring up American Airlines, right? Now let's do a put play. Okay, let me find like a good place. Like, all right, there you go. Although not like although not too much, but let's go over here. Perfect. Like look at American Airlines on December 8th. All right, the previous day. Now I don't know what American Airlines was doing on the monthly and everything. I didn't go back and take a look, right? But let's just say I didn't see anything. Okay, now here I had like I had some buying, and then American Airlines on the 8th just consolidated. It basically didn't do anything. So I run my scans like at night. I'm looking, all right, you know what? This is one level for me. If it breaks below 1715, I'm going to enter puts. Or if it breaks above 1789, I'm going to like I'm going to enter calls. Now when that happens, I'm just patiently waiting, regardless of whatever it like it does during the day. Right now look at this. I don't know where AAL opened up or anything on that particular like on that particular day, right? So now it comes in and look at it. This is going to be my eventual target for American Airlines if I enter puts, and 1807 is going to be my like my target if I enter calls. This particular day, you could have played like both sides. On the run up, you could have entered calls. It would have reached your target, so you would have made your money on calls. And then when it started reversing, as soon as it broke like the bottom of the previous bar, you enter puts and you let it and you let it keep going down. Eventually, if you were looking at it on the smaller time frames, right? Like let's say the hourly or the 5 minutes or the 15 minutes, you would have seen, okay, American Airlines is starting to reverse and it's going back up. That would have been your cue to to get out. You've taken your profits at that point. Again, this is not a perfect science, but this gives you your levels to basically get in and get out. My watch list that I posted last week, I did the same thing. I looked at it. I saw, all right, if it breaks above, this is where I'm entering at 1789. This is where I'm taking my profits. Or if it goes below 1715 is my entry level. And 1654 is supposed to be my actual target. It hit about what 1662 is where it got out, 8 cents away from target. Still good enough. Could have made a nice 70, $80 or $100 on within the same day, you just on puts alone, and you would have because you played calls, you would have made money on that too. So that's pretty much what I like to look at. And these are so nice, the consolidated bars, because the next day it's going to do something. It's going to break either to the upside or it's going to break to the downside. What bias I play is dictated by what is being done on the larger time frames. I'm looking at the daily over here, but to confirm whether I play calls or puts, if I'm playing the daily, then I'll be looking at the weekly and the monthly to confirm okay, the week and the month are green. So that means people are buying. So I want to play calls rather than puts. If I'm playing, let's say, the weekly, then I'm looking at the monthly and the quarterly to see what buyers and sellers are doing on the larger time frames to confirm if I'm going a couple of weeks out, what should I actually be playing. And then everything that happens on the smaller time frame is basically just noise. You just have to you just have to basically ride it through. If you're a month out and you're playing puts, what happens on the daily for a day or two shouldn't bother you, because you've got a month's time on it. Just like how if you were swinging something for a week, would you care what happened on the 5 minute chart, or would you care about what happened on the 1 minute chart? You won't, because you're playing a larger time frame. Similar concept. That's pretty much what you're looking at, and what you actually want to do on this. So I want the 5,000%. Okay. Okay. Your MO put play, or the Neo put play. Okay, let's bring up MO. Now I can't remember the specific dates, Alex. Sorry, but let's see, what MO did, right? Alrighty. So look at MO. Let's say I had this. Oh yeah, MO was right over here. Look at this. MO was green on 326. All right. On 329, MO basically, Altria Group basically consolidated. You see this one bar, it consolidated. It did not break the previous day's high, neither was it able to take out the previous day's low. And so what I did was okay, at this point, I basically mark my levels. If Altria is still is there's still buying pressure. There wasn't, because Altria on the larger time frames at that point, there was actually more sellers. So I knew, okay, even though this is green on the larger time frames, sellers are in control. Eventually there is going to be a pullback and people are going to sell this off. So I just waited. I'm what, let all this buying be done. Let all the small time bulls do what they want to, but the bears are eventually going to take control in this, right? So I mark my levels and I just wait. I waited for MO, the 51.67, to break to the downside if I was going to play puts, or if buyers for whatever reason were just going to take control and slaughter the bears, then I'm waiting for 52.59 to break and let it run up for me to play calls, let's say, for a day or so. I was not going to going to swing calls for MO, only because the larger time frames said that there was selling pressure. So if MO ran up for another day, it would have just been a day trade for me and nothing else. So then what I did was I waited. Look at MO. My eventual target for MO was going to be 50.83, number one, which was taking out this particular bar. And then the next target was going to be 50.37. Those were basically my two targets to the downside. All right. 12, 330 comes along, and now there is selling pressure. See, because it did not break to the upside, it started selling off during the day. Once it broke that 5167 level, that was my cue. Okay, here we go. This is this is where I have to enter my puts, because now this is confirming what I saw on the larger time frames, sellers being in control or the bears being in control. Okay, I buy a put like a week. I can't remember the exact call out, but if I'm playing anything, I would play at least about a week or 2 weeks out, depending upon when I'm entering this, right? So I buy a put, and my target is eventually going to be let's just say 50.5 or 50, because I'm looking to see, sellers are going to take this out and they're going to fill this particular gap. So I enter over here. First things first, it comes out and it takes out this level. Now when it takes out this level, I still see, what, there is still selling pressure at this point. You can either do one of two things. You can take your gains, because you've already made from 5167 to 5083, which is about a buck on mo. That's a good 100% right there. So I can either take my profits over here, or I can add a contract over here, because it shows that sellers are still in control. The next day also opens and it's still selling off. So it's indicating that sellers actually are in control over here. So I add another contract or two and let it ride. And then you see the third day, the same thing happens. Look at how it goes down and takes out my target to the T. 50.37 was my target. It goes down to 50.35. That's what it was. So see, these are my clearly defined targets. At this point, people could hold and be like, oh yeah, you know what, I'm up 400%. I can still write this, because this is still going to continue to keep going down. Yeah, this may still continue to keep going down, but how do you confirm if that is actually going to happen or not? You can't. You don't know if it's going to happen. Hopium is a trader's worst enemy. To hope that yeah, it'll continue to keep going down is your biggest enemy, because you never know what the stock is going to do. It hit your trigger, it hit your target, get in, get out. Don't worry about what happens after that. That's basically the whole goal behind this. Clearly defined entry level, clearly defined trigger, and my clearly defined targets. And because I have two weeks out or so, I'm just writing it. Like I said, on the smaller time frames, everything is noise. This is my target. I want to see it taken out, and the larger time frames are confirming it. And that's pretty much what I did. And sure enough, it hit that target, and you're done. Seems simple, right? I mean, so you see, and this is what I was saying. So okay, people over here, technically, if people drew, most of the guys, what you would have actually done over here is, you probably would have drawn no, sorry, my bad. You probably would have drawn a flag like this, okay, this is a flag. This is eventually this is eventually going to break, and sure enough, it did. But how do you know what am I doing, where am I getting in, where am I getting out? If it breaks over here also, what's going to be my my triggers or my actual target? So what I'm doing is pretty much defining it for myself, that yes, this is it. This is where I get in. This is where I get out. I couldn't care less what happens, what happens after that. Any other ticker that you want to see? You said Neo. Again, it's going to be repetitive, because it, or redundant, because it's the same exact it's the same exact thing. But that's what you look for, right? You look for what happens, what's taking place on after a consolidation, right? You oh crap. Hold on, let me zoom out. Let me look for a consolidating bar over here. Now see, I have different numbered candles over here. Don't go by that. Don't worry about don't worry about those candles, because what I'm showing you is something that you want to start off with. You don't want to learn if you're in kindergarten, you're not going to learn A to Z on the first day. You're going to start with a few alphabets first, and that's pretty much what I'm what I'm trying to explain over here. Oh, perfect. Neo, I don't know the exact day, Alec, but let's just take this one for example, right? Look at this guy. I'm looking at 125 at what happens at 125. Okay, Neo, same thing. I see like, like some sellers, I see another consolidated bar, and then I'm waiting to see like, what I'm supposed to play, right? Cause Neo opens up the next day. Here's my end. Oh, damn it. Let me change this to my price. Okay, so here you go. This is my entry. Now the technique, this could be a target for me, but then it's only like 40 cents away, and Neo has an ATR of about like $3. I'm like, what, if this is going to sell off, it's definitely going to like drop at least like 40 cents. So my actual target that I want to look at would like would be this guy. Now, again, confirm like what you're seeing on the larger time frames. The next day it opens up, fine, boom. Yeah, this guy like like he broke the level. He broke 58 like 64, and now he's going down. Of course, he took out all of this. This is my target, which is like 55 5601. So if you bought like like let's say 2 weeks out, yeah, you would have held through this. This, even though this is a green candle, which is 128, still the price opened below. So once it hits the target, you saw, okay, hey, you know what? My target for Neo is 56. Neo like opened up at 55. Man, like I'm done with this. It basically broke my target. It's supposed to be where I need it to be. I'm getting out. So you would have like you would have seen this, and that day, of course, Neo would have run up and you would have given back all your gains. So that is why it's extremely important for you to like, once you hit your target, you get out regardless of what like what happens, because you never know. And Neo, sure enough, Neo reversed that day. You would have given back all your gains. You would have been like, ah man, you know what, I lost everything. I should have taken my profit at 50%. I should have taken my profit at 70%. How many like how many times have you actually heard that? So I usually use a stop loss of about like 20 to 25%. That's usually like because my contracts are so like the contracts that I play are so cheap. As I said, like on a $50 contract, 20% you're losing only $10 a contract. You know what I mean? Rather than play a $500 contract and then keep a stop loss at like 20% and lose like 100 $200 or so. So that's the reason why I cater more towards smaller accounts, because you want to play those smaller contracts where you can play a lot more linear contracts. I don't like to average down. I've changed how I trade. I don't like to average down. I will scale in, which means that as like as my plays are confirming, as I'm going green, I'm adding contracts. Then like one contract becomes two contracts, becomes three contracts. But on the run up, when I say run up, regardless of whether it's a call or a put, if my contract I entered at 100 and it's still confirming what I'm seeing on the larger time frames, I'll add to a contract. I'll add to a contract. I'll add like I'll add another contract. I'm not averaging down, because when you average down at that point of time, you're basically playing on hope. You don't know if that stock is actually going to reverse or not. And hopium is a trader's like worst enemy. So I don't like to like do that. And so I can, like I said, I hit my target. Neo opened at like 55. All the premiums are like juice. Volatility is extremely high. When like market opens, get out, sell everything. It hit your target. That's all you need. Who cares what it does the next day? Why do you want to hold something till like expiry if you can make your money within a day or two? Wouldn't you rather do that and then move on to something else? Why, just because like you have a contract that's 2 weeks out doesn't mean you have to hold it that long. So that was a Neo put play. I think I got the dates wrong, Alec, but again, this is just to show, right, like like how I would basically take my put place, or even like my call place. Yes, I think I answered your stop loss like in a 20%. Yep, usually like in a 20%. But again, 20% is mine. I can tolerate about like in a 20%. You don't have to keep it at like in a 20%. You can keep it at 10%. And you could ask like, hey, I keep it at 10%. I got like stopped out. That's okay. If you got stopped out, you got stopped out. Doesn't mean you can't enter back on a reversal. So Neo, let's say you enter and like you get stopped out because now Neo is running up. Okay, you get stopped out, fine. If you're watching Neo and Neo now reverses again and starts like going back towards like its actual trend, which is the downside, enter again. You can make back what you lost and then some. Doesn't mean that just because you got stopped out on something, you cannot play it again. You always can. And if you're playing like in a cheaper contracts, it's like it's a no-brainer, right? I mean, you can play like I think play them multiple times. PayPal on the daily chart looks like interesting. PayPal on the daily chart looks interesting, yes. But again, PayPal is something which currently is sort of in like thing. It depends upon what it does today. If PayPal closes green today, then it's going to be green on a lot of time frames. So see on the monthly right now, it's like it's consolidating. Let's bring up the quarter. Where is that? Okay. PayPal on the quarter is green too, nice. And PayPal on the year also should actually be green. Yeah, PayPal will be good, like would be good for calls. So yeah, absolutely. Like if I was playing like in a PayPal, yes, I would definitely play calls only after I see how it closes today. Because if it closes red today, it would sort of put like some time frames in conflict, which basically means the daily and the weekly would be in conflict with the monthly like in a time frame. So that's so I would like wait to see what PayPal happens. That's what I wanted to go over, guys. So like this was more of, as I said, how I hear a lot of like I hear a lot of guys, and I wanted to address this like at the same time for everybody, is like how do you decide like when it breaks a bull flag or it breaks a bear flag or whatever be the case, right? Where do you take like your profits? If you look at my chart, I have nothing on it. I have absolutely nothing. I just have the volume indicator. I have the candlesticks, which my candlesticks are basically numbered, no EMAs or nothing. And only because I'm, like I said, I'm trading primarily on price action. PayPal tomorrow would be really interesting because this is a hammer right here. So I would wait for it. So let it close today, let it do whatever it does. Like if it closes like this, then tomorrow definitely. I mean, let's say if it closes like this, I would probably like enter this. This would be my first target, which is about 253. And then the next like candle above that, I would probably play it like that way, which is going to be around over here, 254.67. Those would be my targets to enter. I mean, my triggers to enter, and then like my profits to basically get out. So I'm only trying to show and trying to help people avoid the whole thing is like like oh, where do I take my profits? Because yeah, a lot of new traders, when you join, right, you see people making like like $5,000, $10,000, like 20K in a month. You see people making 1K, 5K, like during the day, right? And that's lucrative, and it tempts you too, like oh, you know what, if I hold on, I can definitely make those kind of gains. I can reach like 1,000%. No, it doesn't happen. Like it doesn't happen that way unless you play a large volume of contracts. And a lot of people have the capability to do it, and a lot of people actually don't. So what do you do in that case? And that's what I'm trying to like trying to show you. Like, okay, you have your trigger, you have your target, make it a target based on what the chart is showing you, not a target that you want to see. That you do not want to like you do not want to do that. You see what the chart is showing you. My first target, it closes at 250. Like let's say today it closes at about 250.78. My first target is around 252.63. Let's say 253. That's a good $2-3 like move. And then after that at 254, that's another like $2 move. And given PayPal's ATR, yeah, it could possibly hit it. That's how realistic you want to be with your trades. Somebody wants me to go over PLTR. Pablo wants me to go PLTR. PLTR, not a lot like happening. Yearly is like there's a shooter on the yearly so far. Let's see if this can actually reverse on the quarter also. Yeah, see, the quarter was a shooter, right? If I was playing like if I would look at this on the larger time frame. So this is a quarterly. The last quarter closed as a shooter. Okay, so I could potentially like if it breaks this 20.5, there could be a lot of like selling pressure on Palantir, and it could potentially drop. Would it hit 8.9? Probably not, but it's possible. I mean, like crazy things have happened in the market. On the larger time frames, I'm seeing everything on Palantir to be like in a red right now, which basically means there's still a lot of like selling pressure going on Palantir. I wouldn't necessarily trade Palantir right now unless you're in shares long term or you buy a leap long term. Now would be a nice time to start like looking at leaps for sometime next year for Palantir, but shorter time frames, Palantir is doing nothing for you to get in. Will this be in live educational resources after? Yep, I believe Trent is like going to do it. Yes, anybody who's in VIP, this is all the value add for you guys. How do you select a target for something like Mara where it's at all-time highs? Nice. That is a great question, and I'm glad you actually asked that. Mara at all-time highs, usually when something hits like all-time highs, there's always a risk for exhaustion. And what I mean by exhaustion risk is after it hits all-time highs, it could potentially like in a pullback, right? Because it's reached all-time highs, it needs to like take a breather, and then eventually it'll pull back for a bit, and then it might like run up again. So usually at all-time highs, personally, I it makes me nervous because like I feel like, okay, this has reached its all-time highs. Who knows if it's going to actually like pull back or not. So what I would do is, if I was trading this, I would wait to see like what Mara actually did. If it pulled back, then like I'll wait for the pullback and then start seeing like where the buying pressure is, or the selling pressure is, and then basically make a call accordingly. I try to avoid things that are at like all-time highs. My personal like trading style. But Mara is looking good even on the monthly. Also, it's in constant like run up. On the quarterly. It's like it's green. On the yearly, it's definitely like green. So there's a lot of like there's a lot of like buying pressures. But you just want to like you just want to monitor, because see, at this point, people who are entering calls, right? You think of it this way, like what could happen. Mara could continue running up, and you missed out on an opportunity. Oh shit, I missed out. Like, and I could have made like $1,000 on Mara. Or you enter here and Mara pulls back, like, oh shit, I've lost like money on Mara, right? You want to wait and see. You want to gauge where Mara is going to basically go from this point, and then like then determine, because at this point, if it pulls back and then it starts reversing again, that would be your cue. Your same contract, like let's say a 56 like in a contract for you, like a month out or so, you could probably get it cheaper. And then when it starts reversing, you are already in gains, right? So that's how you want to look at it, and that's how you want to trade. Something all-time high could keep on running up, or it could potentially like pull back. So you've got to decide at that point, like, okay, I'm going to wait for the pullback and then get in, or I continue like letting it like run up and take that chance. So MB, did you just join? Did you go over MB? MU, it's close to its all-time high. Same thing. I just explained like how I would trade all-time highs, right? So yeah, MU, and plus it has a big gap also. So it reaches all-time highs. When it reaches, actually all-time high is 95.49. At this point, you can wait and see what it actually does. If it takes out its all-time highs, or if it actually like eventually pulls back. Because if it lands up pulling back, then it has this nice gap to fill. At this point, you wouldn't like you wouldn't take a chance playing puts, because you don't know where Micron is actually going to be heading. On a reversal, then you would look at like then you would look at playing. So I would probably wait for it to break 92.4 to the downside. First target would be this guy, 91.23, and then my next target would be the gap fill, just like how I did it for MO. That's how I would play it, but I would play it on a reversal. Right now I wouldn't play this because this is a hammer right here, which means a lot of like buying pressure. So I wouldn't enter puts necessarily at this point. Which stocks do you recommend for small accounts? Here you go. Take a screen. You know what? Actually, let me change which screen I'm sharing. Right, take a screenshot of what I have. You can see like the stocks that I have inexpensive, like inexpensive tickers. So there's American Airlines, Apple, AMC, AMD, Bank of America, CCL, GoPro, Halliburton, IAU, IWM. IWM, I won't necessarily say is cheap stock, but it's like, it's the cheapest index amongst like, QQQ SPY, and so I pick IWM. So yeah, take a screenshot of these, and this list, it's in flux. So like, I add tickers to it, I remove like, tickers from it. But at this point, these are like, some of the stocks that you can like, look to play. Like, it's good for small accounts. Accounts that are less than $200 also can buy like, contracts on these and play them. So again, just to quickly go over, if you guys also, right, like let's say tomorrow, day after, whenever, if you are unable to join, Zoom, or if you all don't know what to play, like, maybe an admin missed making a call out for like, for something that they're actually playing. Look for these. Look for stocks that are consolidating on some like, some time frame. Holy smokes, look at MU over here. Wow, this would have been an awesome put play. So look for stocks that are consolidating, like, just like this guy. Like, here's a one, here it consolidated. If it takes out this level, here's my first target. Then my next target would be like, this, and as soon as it hits a target, I'm pretty much done. And sure enough, that's exactly what like, MU did, and then some. Do I use TOS squeeze for consolidation? No, I do not use any indicators other than just the volume and just price action, just pure price action. That's all I'm doing. No other like, no other indicators, no other indicators on my. Sure, no problem. How do you have it at setup? I'm not sure. Do you recommend a cash? Oh, cash anytime. I do not recommend margin. You could get your ass handed to you, because like, if you get margin called, or whatever, like, you would get screwed. You do not want that. You absolutely do not want like, margin. um do a cash account. With a cash account, it gives you the flexibility. Also, you can like, you can trade multiple times during the day without hitting like, PDT, as long as you have, settled cash. So I would say definitely do like, a cash account. Cash account is great too. It does not like, it does it prevents you from getting your ass handed to you, number one, and it but it does not prevent you from being able to take like, the plays that are being called out. So don't like, so don't worry about like, oh man, you know what, margin is better. No, it's not. It's really not. You don't want to have. I do not have my ass was handed to me. Yeah, I'm sorry that that happened, bro, but you don't want to have like, you don't want to have margin. Trade on a cash account, right? I mean, all of us, like Trent, Danny, Alec, Devin, Paul, Deshambe, Mario, all of us, like, we all caught like, tickers that cater to like, to a vast majority of all the traders that join Zoom, right? Right from small accounts to medium accounts to large accounts. So just pick like, whichever play might like, might be better for you. Like, yeah, some plays you might be able to make a month's worth of like, percentage in a single day. And in some trades, you basically like, it'll take you a month to make like, that exact same amount. But the main thing is, what's happening, right? And when you can repeat the same thing over and over again, at some point of time, you're not going to need us, guys. You'll be able to make your trades on your own, because you'll know exactly what you're looking at right now. As I said, one of the biggest thing that I've noticed, is where do like, a lot of young traders don't know where to cut, like, where to cut their calls or their puts, or where to basically take profits. And I'm just trying to like, help you all with that, is to like, know when to get in, know when to get out, and then don't look back. Don't even like, look back on it. I made like, like last year I could have made about like 33K on Boeing in less than 2 days. I did not. I mean, like, I took my profits, it hit like in a certain target, and I was done. And that's the be all and end all of it. If I can repeat my process, hopefully eventually at some point of time I'll make that 33K, even if it takes me like, 6 months. At least I know something is working for me. And that's what I'm trying to like, help you guys see, that you could find something that'll help you. You could, as long as like, you stick to it, as long as you follow it, the market has a lot of money for everybody, like, to go around. You just got to take what, like, what is given to you. Just like I said, somebody walks up to you, gives you $1,000, you take it. or and like you close the door and be like, all right, awesome, let's like do something with it, or you give it back and be like, okay, give me 5,000 only for the door to be shut on you. That's your choice. Cash App, actually, Pablo, I don't have Cash App, bro. I appreciate that. If you don't mind, if you can send it to Trent, hopefully Trent doesn't mind. Trent can then forward it to me, because I only have Venmo. So if Trent doesn't mind, maybe you can send it to Trent, and he can send it to me. Thank you, Pablo. I appreciate that. Yeah. And so I'm on Zoom pretty much every day. I'm available anytime you'll want to you'll want to ask questions, or you'll want any clarification about anything. We are all there, all of us are there. Everybody makes the call outs. So play up and just the thing, learn from it. As I said, I got my ass handed to me too. I was never a profitable trader from the beginning. I literally got my ass handed to me before I decided, what, okay, I've got to change what I'm actually doing, and hopefully my experience helps you guys, right? So that's pretty much what I want to I want to see you guys. I want you all to eventually at some point of time get to the stage where you all can basically make your own plays without needing us. If you'll need us, that's well and good, but if y'all don't, that's even better. We're all here to help out, and we'll continue to trade as long as we can. So what about settled and unsettled funds for a cash account? Yeah, I think it depends upon a trader's crack. Some traders, I think it takes like a day or so. Some traders it takes 2 days. So once the cash is is settled, you can you can basically use it to trade again. Now it all depends upon the kind of plays that you want to take also, right? Eventually at some point of time, I mean, if you have 500 bucks in your account, you don't want to go 500 all in on a single play. You know what I mean? You would probably take a few smaller plays just so that you have remaining cash for something else. But I think it takes about like a day or 2 days to settle, if I'm not mistaken. Any other questions, guys? As I said, I covered calls and cash secured puts. The audience probably would be a lot less at that time, only because so many people have heard it already. But I'll do a covered calls and a cash secured put education Zoom too. Because that one is great for small accounts too. I have a lot of plays for for small accounts, and you don't have to spend more than 100 $200 to be able to make a nice 20, 30, 40% on that. Just steady income, basically. I'll go over that too. When's the book coming out? Trent's book is already out. David Dean Trent, he has a website also. Bringyour small account.com. So you can get it from there. But the book is already out. And Trent was nice enough to let me also add the covered calls and the cash secured puts section to it. So that's there in that book too. People I mean, a lot of people like reading and learning. A lot of people like listening and learning. The people that learn a different way. And as I said, I'll definitely go over covered calls and cash secured puts too in one of the upcoming sessions. I might have missed it. Actually, bro, if you look at my charts, I'm sharing, I think I'm sharing the rights. Oh, no, I'm not sharing that. But let me, quick last thing before I turn it over to Trent. Um, if you look at it, I don't have any support or resistance lines on mine. There is nothing there is nothing over here. I have the auto fib, which I use sort of as a guidance, but my main thing is I'm basically looking at my strategy, the way I'm trading it. I have set entries and set targets, there's no support or resistance or anything of that sort. I'm trading in a specific way with with set defined levels and targets, nothing else beyond that. So I do not have thing. But to answer your question, you would start off on the longer time frames first. You would start on the weekly, then you would do the daily, then you would do the 4 hours, and then you could do the hourly. So if you're drawing your support and resistance lines, you could as I said, start from the larger time frames, the weekly, then the daily, then the 4 hours, and then the hourly. F Karini, to answer your question. I just don't have it I just don't have it on mine. I have no use for it. That's why I don't have it on mine. Doesn't mean to say that it that you can't add it. Sure, absolutely. But you, like I said, you just need to have defined triggers and defined targets. That's the whole goal. Damn, I can talk too much. I should actually become a college professor.
Great lesson, Hirsch.
I know,
Thanks so much.
Sure, no problem.
All right.